Hello everyone and welcome back to my favorite series, My Road to 100,000 euros, where I share with you guys my investment portfolio. And every month I invest 1,250 euros. I do that on BUX Zero, BUX X and DEGIRO. And I try to divide it into dividend stocks, growth stocks and ETFs. And in May, I added a new ETF to my portfolio. So that brings the total of ETFs to 3 that I currently own. And I thought it was time to dive in a little bit deeper in what are these ETFs, where am I investing in with those ETFs, and why did I buy these ETFs. And the nice thing about BUX Zero and DEGIRO is that you can buy ETFs without paying a commission fee. On BUX Zero, you can basically buy all the ETFs that you want without commission. And on DEGIRO, there is a list of specific ETFs that you can buy once per month without paying commission fees. If you also want to invest in ETFs like me without paying a commission fee, there's a link in the description for BUX Zero and DEGIRO. And if you make an account via that link, we will both get a nice welcome bonus. In my portfolio, I would like to have a split of around 80% in stocks and 20% in ETFs. And the reason why I like to do this is investing in individual stocks is nice, but it also is more risky than investing in ETFs. Because if you invest in an ETF, that means you are well diversified over many different sectors, many different companies, and also parts of the world. And of course, this depends on what ETF you're investing in. There is a million different ETFs out there, but the ones I'm investing in are mainly spread out throughout the world. Of course, with a strong focus in the US because that's where the most valuable stocks are, and in Europe. But yeah, like I said, you are well diversified. So if one stock goes really bad, it goes to zero, or a certain sector goes really south, you won't really be affected by it much because you have all these other sectors and all these different stocks that will make up for that loss. But on the other hand, that is also a drawback, because if one specific company or one sector does really well, you won't really profit as much from it as if you would have invested in just one stock or one sector. But yeah, I think it's nice to have like a mix of it, and I am more invested in individual stocks than in ETFs. And probably when I get older, like maybe 40, 50, 60 years old, I will switch it and start investing more in ETFs and less in individual stocks. Because right now I don't have a high net worth, I have not a lot of money invested, so I can take a lot of risk. But hopefully when I'm 40, 50, 60 years old, I have somewhere around 1 or 2 or even more millions invested. And then it's not just about growing your wealth, but also maintaining your wealth. And then I would be much happier with a lower return, if that means that my net worth is more safe. With that being said, let's look into the ETFs. Oh yeah, and if you want to know more about what investing in ETFs is, what the advantages are, what the disadvantages are, or just general information about investing in ETFs, I recently made a video about how to become a millionaire investing in ETFs. You can check that in the link in the description, or you can click here on the icon to see that video if you would like so. With that being said, let's look into the 3 different ETFs that I'm currently investing in. So I'm gonna share my screen for this one. Let's dive into it. One document that's really important if you are investing in ETFs is the fact sheet. And here I have the fact sheet of the Global Dividend Aristocrat ETF. And if we look at the index description, you see here the S&P Global Dividend Aristocrat Quality Income Index is designed to measure the performance of high dividend yielding companies that have followed and managed dividend policies of increasing or maintaining dividends for at least 10 consecutive years and simultaneously have a positive return on equity and cash flow from operations. So that's a lot of terminology, financial terminology. What it basically means is that this ETF follows the highest paying dividend companies that are out there and that have followed
dividend policy of increasing or maintaining dividends for at least 10 years in a row. And another thing that is important is that they also need to have a positive return on equity and cash flow from operations. What that means is that they really want to have quality dividend stocks. Sometimes you also find high paying dividend stocks, but they cannot really afford to pay that high dividend, and they just try to lure investors in by offering a high dividend. But if you look at their cash flow, they cannot really pay that dividend, and they have to borrow money to pay that dividend. And of course, you can do this in the short term, but in the long term it's not sustainable to pay more in dividends than you get in cash flow from your operations. That's why they included that sentence as well. If we look at some of the key facts, we see the TER, that's an important one, like I said, total expense ratio, and that's 0.45%. And this has a really big influence on the total return, and especially over time. And you want to see this number as low as possible. 0.45 is not super high, but it's also not really low, and I think that is mainly because of this ETF. It will probably change a lot because you really have to monitor closely if those companies are keeping up with their dividend policies. Are they still generating enough cash flow? And basically how you have to see this is if you make a 7% profit, 0.45% will be subtracted from your profit on a yearly basis. And it's not that they will send you an invoice and you have to pay this. They will do this automatically, subtracted from your invested funds. Income treatment, quarterly distribution. So that means that every quarter they will pay out the dividend amount. You also sometimes see that they reinvest the dividends right away, so you don't have to do anything. But in this case, they pay you per quarter the dividend. And one thing I forgot to say is if you want to look up these ETFs, you always need to have a symbol, a ticker symbol. And here you have the index ticker, and here you can see the exchange ticker. So different stockbrokers operate on different exchanges, and I use DEGIRO and BUX Zero. And for DEGIRO, if you type in this ticker, the ZPRG, you will find the ETF. One of the big reasons why I bought this ETF is the dividend yield, and as you can see here, the dividend yield is 5.13%. If you take out the total expense ratio and you look at the dividend yield, you already make a profit of around 4.6% per year. And then of course you can also earn money if the stock prices increase. But because these are dividend aristocrats, so companies that do, in this case, more than 10 years paying out dividends, you talk about pretty big companies. So most of the growth already happened. A lot of their cash flow that they generate will be poured back to the investors, and of course that's always nice, but it also means that they don't really invest a lot of their money in growing their business. So don't expect stock prices to increase a lot, but with the dividend yield alone you can already make a nice profit. There are 99 different companies in the ETF at this moment. PE ratio of 12.16, which is pretty low, but that's also something you expect from high paying dividend companies. Investors are more likely to pay a higher price to earnings ratio if it's a relatively young company with a lot of potential, because that justifies paying a little bit more today so you can earn it back in the future. But with these companies, because they are so big, there's not a lot of growth potential, and that's why the PE ratio most of the time is lower. If you look at the top 10 holdings, I don't know all of these companies. ExxonMobil, of course, AT&T. I recently bought AT&T. Yeah, some other companies, tobacco company. If we look at the sector breakdown, 25% of it is in financials. You have utilities, real estate, consumer staples, community services, energy, basically all the sectors that you will expect from high paying dividend companies. If we add these up, it's like 25, 43, 56, 68, 78% is in these 5 sectors. Then we go to countries. Most of it in US, almost 50%. We have almost 10% Japan, UK, Canada, China, Switzerland. So as you can see, very nice spread throughout the world. Of course, very big focus on the US. Europe is a big part of it, but also some in Asia and a little bit in Africa and the Middle East. Let's move on to the next one, and that one is Amundi MSCI World ETF. And Amundi is another company that holds and maintains ETFs. One thing I forgot to check was the annualized returns, and as you can see here, the 10-year one is blank because this ETF doesn't exist for 10 years. If you look at the 5-year, you can see that there is annualized return of around 7%, and if you look here at the cumulative performance in 5 years, you can see more or less 41%. So that means that if you invested 1,000 euros, you would now have 1,400 euros. If you look here at the calendar performance, also nice to see, it's like 2016 went up 13%, in 2017 18%, went down 9%, then up 20%, and in 2020 only down 9%, and this year is up 4% so far. Alright, let's go on. So like I said, Amundi World ETF, and if we look here at the investment objective, this ETF seeks to replicate as closely as possible the performance of the MSCI World Index, whether the trend is rising or falling. So what they do is they just monitor like what is the MSCI World Index doing, what companies, what holdings are in there, and they replicate as much as they can. Let's look at some key metrics. If we look at the TER, or here it's called ongoing charges, it's 1.38% per year, so it's a little lower than the other ETF that we just saw. And this is also funny, minimum recommended investment period is 5 years, and that's something you really have to have when investing in general, but also especially also in ETFs, is to have a long time horizon. Like I plan to keep this ETF for good maybe, but at least for 10 years. The dividend yield, I cannot find it in this fact sheet, so that's why I also opened the MSCI World Index fact sheet that we can see here, and the MSCI World has a dividend yield of 1.67%. That's what I was talking about earlier, like when we saw in the Dividend Aristocrat ETF a PE of around 12. Here we see a PE of 31.44, so that's almost 3 times higher, and that's because this is really a growth ETF. And if we look at the annualized returns, we see over a period of 3 years it's 14%, over 5 years it's 14%, and 10 years it's almost 10%, so that's pretty good. And considering that the expense ratio is only 0.38%, that leaves you with more than 9.5% on average over the last 10 years. I would be really happy with that return. So then if we look at characteristics of this ETF, there's more than 1,500 different companies in this ETF, and the largest has a market capitalization of more than $2 trillion. You guys can guess which company that is. Obviously Apple. And the smallest one is just above $1 billion. This one doesn't only invest in large cap companies, but also mid cap or almost small cap companies. And that's here, as you can see, the MSCI World Index captures large and mid cap representations across 23 developed markets. So developed markets are the first world countries like the US, the Netherlands, Japan. As you can see here, the top 10 stocks: Apple, Microsoft, Amazon, Facebook, Alphabet, is a mother company of Google, Class C and Class A, Tesla, JP Morgan Chase, Johnson & Johnson, and Visa. And these take up 17% of this ETF. So only 10 stocks out of almost 1,600 make up for 17%. Then if we look at the countries, the biggest one, of course, US, more than 2/3 of the weight of the ETF. You see Japan, UK, France, Canada, and the others make up the other third of it. If we look at the sectors, IT is really big, financials, healthcare, consumer discretionary, and then we are going to the last ETF of today, and that is the Ishares Euro Dividend ETF by BlackRock. BlackRock is one of the biggest investment institutions, if not the biggest in the world. This was one of the first ETFs that I bought. I bought this one on BUX Zero. It has a TER of 0.4% per year. Distribution type is quarterly. They also pay out here the dividend. Assets of the fund almost 1 billion. Number of holdings holdings only 30, so that's not a lot. 3.03% dividend, which is okay. If we look at the annual performance, last year up 44%. Look at the 3-year, it's even a minus annualized. On 5 years, 5%, and on 10 years, also around 5%. And here you see a nice example of why it's so important to invest for a longer period of time, because in a year, okay, it can go up a lot or it can go down, but if you do it more than 5 or 10 years, you see it averages out to be around 4 or 5% for this ETF at least. And again, as you expect with the higher dividend yield in ETF, very high in financials, communication, real estate, utilities, and consumer discretionary and staples. And this ETF is nicely divided throughout Europe. Here you can see the biggest one is Germany, France, Italy, Finland, surprisingly, the Netherlands, Belgium, Austria, and a little bit in cash and derivatives. Ticker symbol is IDVY. So if you type this in BUX Zero, you will find it, or you can type in the Euro Dividend ETF, you will also find it, and you can buy this one in euros or in pounds. And the biggest companies, the biggest companies here, Orange, Proximus, NN Group. Orange is communications. In France, Proximus, I don't know, it's a Dutch company, but I don't know what they do actually. NN Group, insurance. AXA is consumer staples. Big Telecom from Italy, and so on. So I will leave the fact sheet links in the description so you can check it out yourself if you want to.
Those are the 3 different ETFs I am currently investing in. Let me know what you think about it, and I'm also very curious to know in what ETFs you guys are investing in. Let me know in the comments down below. I would love to hear about it because I'm always open for new investment opportunities. If you made it this far in the video, I want to thank you so much. I really appreciate it. If you have any feedback for me, please let me know. And if you like this video, don't forget to smash that like button. Really helps me out a lot. And if you haven't already, don't forget to subscribe. Again, thanks for watching, and I hope I see you in the next one. Have a great day.